um, to take us up from where we started and where we are now. I would always love to do a little recap of what we've done so far. We started with doing an introduction to the course. We told you that management accounting, um, it's from your basic cost accounting that you did in school. That is, if you studied accounting. Um, we also explained the course syllabus, telling you about all the components. I can remember that time I mentioned that if you were having any hatred, any kind, for any topic, please don't bring the hatred down here. And my colleague started the class with defining accounting, telling you about the different classes of accounting, the qualities of a good information. We can remember that acronym ACCURATE, that will help you remember the qualities of a good information. Before we proceeded into the purpose of management and accounting information, which serve the basic purpose of planning, controlling, and decision making. Differences between the two broad accounting classes of financial accounting and management accounting. And also, we spend time to look at data and information, where we looked at samples, sample types, and the different methods of carrying out samples. In the last class, you were taught about cost classification, which I'm sure Mr. Phillips must have told you that cost can be classified by type, by function, by behavior, and by
By
traceability.
nature,
Yes, if it can be traced.
by
He
nature,
said, go ahead. By
by
nature,
nature.
yes. All of those are different classifications of cost. And I'm also sure that you know the different costs under each classification. A good number of us attended that class, so I will not spend so much time there. Okay. Um, I will just move forward to what we would have to do today, which is cost behavior. So I love taking it as basic as possible. When we say behavior, what do we really mean? We would say all of us here have different behaviors. We have somebody that is behaving in a way that you like. You can also say this other person is not behaving in a way that I like. And under classifications of cost, I'm sure you learned about cost behavior. Now, there are some costs that is going to smile at you, and there are some costs that does not smile at you. There are some costs that keeps its face the way it is. Either it doesn't frown, it doesn't smile, it's just normal, regardless of what you're doing. Now, when we say cost classification by behavior, we are going to build on what we learned in the previous class. So it's like from step one to step two. When we say we want to classify cost by cost behavior, we are simply saying, let us look at how does cost change when the volume of our activity changes. So what is the variation? What is the reaction that our cost perform if the level of activity changes? So if, for instance, if I'm going to run my generator for 3 hours, what cost is going to change? If I'm running the generator for 5 hours, which of them, which of the costs is going to change? So I'm sure that Mr. Phillips introduced you to the concept of fixed cost, variable cost, semi-fixed cost, and the likes. I hope the things I'm saying are not strange. Please use a thumbs up to indicate if you can hear me very well and if we can follow. All right, that's brilliant. So I can proceed. That shows we are all following. So when we want to talk about cost behavior, we are looking at the items that we are producing. What's our activity level? Words like activity level, volume of activity, number of items, they are all synonymous in this case. So whenever we are looking at cost behavior, we are trying to look at how does our cost respond to either an increase or a decrease in our activity level. I would love to take a pause here and then tell us something. There's a brief though someone may call it fictitious story or somewhat, when we mentioned that in the animal kingdom there is a particular animal that does not appear to be tired of eating. All of us here, if we were brought up in the village setting, you will know that the hen would always be moving around from morning till evening without being tired. The domestic fowl that we have. Now, a child once said he wanted to achieve a point where the hen would be tired of walking around. So the child took corn and finished the whole comb, the whole like the whole corn from a stack on the moving hen. What happened was that that hen, after taking the whole corn, was still moving around again. So let me relate it back to what we were saying. There are some costs that whether you are spending hundreds or whether you're producing hundreds of thousands, it doesn't change. Whether you're producing as little as, it doesn't change. Let's take examples of those costs that looks that way. Your rent typically is an example of cost that would not change regardless of the activity level. So if 5 people come to stay in your room, the rent that you paid will remain the same. If one person stay in your room, the rent that you paid will remain the same. So put differently, most of our sunk costs will be regarded as being fixed in nature because they've been incurred in the past. And whatsoever we are doing currently have little or no effect on it. Let me take some examples. If we buy a car for 12,000 naira, for instance, or let's use $12,000, and we are told that the car would be reduced in value by 6,000 every year. We are charging depreciation every year on the vehicle. Would you regard the cost of that car, the depreciation that you're charging on the car, as being a fixed cost or a variable cost? I'm
Very
I'm
focused.
speaking from the I'm speaking from the yardstick that we've already understood that when you are classifying cost by behavior, you have fixed cost that doesn't change with regards to changes in activity level, variable cost, a cost that changes as activity level changes, and then we have the step fixed cost and the rest of it. So I'm just building on that information. I know you've learned about that in the previous class. So I'm asking, you buy a car for $12,000. Depreciation is charged on straight line basis. Is that depreciation a fixed cost or a variable cost?
Very
A
focused.
variable cost.
Let's just one person should say it and say why.
It's a variable cost
Why?
because it reduces, it changes as the quality of the car reduces, the value reduces as well. So
I
anyone,
hope we understand the meaning of straight line basis. Who is that?
Is
Who is
a
the next person? Somebody have another
Sir,
point?
is a fixed
is a
Go
fixed
ahead.
cost.
cost.
Reason.
Is a
You say it,
fixed
you say
cost.
why. When you say it, you say why you are saying it.
Okay, why? Because uh, is a continuous thing and is on a straight basis, which means the cost has already been fixed and it doesn't change.
Any other person with a different view?
Is a
Any other
fixed
person?
cost because despite the activity level of using the equipment or the the equipment, it will never change the cost. The cost still remains stand.
Okay, fine. We've had different views. That's just a basic example, not examinable. However, from our definition of what fixed cost is and what variable cost is, any cost that does not change regardless of activity level, any cost that does not change regardless of activity level is considered as being fixed. So we would say, for instance, now straight line basis for depreciation implies that you are providing a fixed amount. You are providing a fixed amount, whether you are using the machine, whether you are using that car to run 100 miles. In fact, if you are not using the vehicle at all, and as the case, straight line basis implies the same amount stays all through. That was just a uh, that was just an hypothetical example I just brought up. So if I'm using the car from Ekit or from Uyo to Lagos, the depreciation that I am providing for the car is a fixed amount, straight line basis, the same amount every year. If I'm using the car from only uh, Lagos to Ogun State, it's the same amount regardless. Okay. Let me relate the same vehicle. The fuel that we are going to buy for the car, would that be regarded as a fixed cost or a variable cost? The fuel and the
Variable cost.
petrol and the oil.
A variable cost.
variable
All
cost.
right.
Variable cost
Variable cost.
because
Well,
prices changes with
variable cost.
Okay, that's pretty fine.
It's a
Now,
variable cost because it changes.
all right, let's proceed. So, if we are to explain, if we are, please let's mute our mic, mute your microphones, everyone, please. If we are to explain further, you are asked what fixed costs are. Fixed costs are simply period cost or period charges. It relates to a span of time. So we would always say that fixed cost remains the same in totals, regardless of changes in activity level. So examples of fixed costs would be the salaries of the managing director, the rent that you pay, depreciation, and a lot of other items that you can think of that are
Insurance.
insurance premium
Yeah.
remain static for the whole period of time.
Premium is the money that you pay to. Is the money that you pay to insurance or the money that insurance pays? What are you
Now,
saying?
why would we say insurance premium is fixed? I mean, if I pay insurance premium for my own vehicle, whether I'm carrying 5 people or 100 people, like that amount I paid will not change for the whole year. I hope we are following. Or if I'm paying insurance on on my building now, I say I'm insuring this building because of this. The level of activity does not really affect the amount I have paid. That's why we started with the defining fixed cost as being period cost. When we say period cost, we mean what you're paying for over a long span of time. Fixed costs are period costs. Fixed costs are period charges. You're paying it over a long period of time. Whatever you do in between the period of time does not cause a change in the amount that you have already paid. That is fixed cost. However, when we say variable cost, we are saying the cost that tends to differ, the cost that tends to change in direct proportion to the volume of our activity or our output. So if we give examples like the cost of raw materials, I want to produce 50 loaves of bread. The flour I will buy will differ compared to when I want to produce 5,000 loaves. I hope we are following. Sales commission. We have someone here working and earning commission. When you make so much sales, you would get, that's your output. The output, your level of activity, what is coming out of production will tell on the fixed cost. But these activity levels, number of produce, all of those things does not tell on fixed cost. I hope we have the differences so I can proceed perfectly well now. I would love to go back and then
So I have a
take a look
question,
at
sir.
Go ahead, please.
Okay, for a salesperson that has like a fixed salary and has like additional commission to it, like maybe whatever he sells, it comes with commission. What do we regard that kind of payment for that salesperson? He has a fixed payment like salary, then he has another one like commission based on what he sells and all of that. How do we regard the total payment of the salesperson, or do we just
So
split it into two and say fixed and variable?
so any cost that has both the component of fixed and variable is called a mixed cost. Mixed.
Okay, thank you
Mixed.
very much.
So we'll
Mixed
learn
cost.
about that. Yes, mixed cost,
Okay,
because
okay,
there is a component of fixed and there is a component of variable. That means we don't carry the two costs, we jam
okay,
them together.
okay. Thank you very
Shift
much.
and shift and shift am. And that is the basis
Okay,
for most of the things that we'll do in the future. We'll have to come and start saying segregation. Let's come and segregate. Let's come and sieve out the variable components inside a mixed cost. Let's come and sieve out the fixed component inside the mixed cost. Thank you for
okay.
bringing that up.
Thank you very much.
All right. So to ensure that we are following, I would love to reiterate what we are doing. We are looking at cost behaviors patterns today. And we started the class by saying that cost behaviors are the way I'll be using Pidgin and the rest of it to mix our code mix code switch so that you people will understand perfectly well. The way cost react, our behavior as individuals is simply the way we react. When somebody makes you happy, the way you react. When somebody makes you angry, the way you react. That's your behavior. How you respond to happenings. How you respond to happenings. If you are angry, you transfer aggression. That's your behavior. That's how you respond. So cost as well also responds. Whenever a cost responds in direct proportion to changes in activity level, we call that cost a variable cost. A cost wey no dey send, e no mind you whether you dey produce 50,000, whether you produce 100,000, that cost no even send you. That cost na fixed cost. From the name fix, in dey stagnant. And we've started the class to say that fixed costs are period costs. You pay the money for a long period of time. So when anything wey you do, no concern am. Na make you come dey pay am steadily throughout. So fixed costs will always be shown graphically as being parallel to your output or a level of activity. It remains the same. Whether you produce 100, you produce 200, it remains the same. And we've given examples like salaries. Most of your salaries is a fixed cost. That's why people are saying salaries is not good, because whether you are able to produce, for instance, you're working in an organization and then they are able to produce 5,000. You're working for a flour mill, for instance, that are producing 5,000 bags of flour. I mean, the admin officers' salaries, that is managing directors, accountants, and the rest of it, those people in admin. Whether the people in the production yards are producing 5,000 items, now your salary remains the same. It is only labor cost, wages. Please let's note this, that there's a difference between wages and salaries. Wages differs as production changes. That one is a function of maybe we pay you depending on the wage rates that is used, whether it is time based, output based, as the case may be. So wages would differ, salaries remain the same, and we would say maybe salaries of the managing director, the supervisors, and all of them. Those ones are fixed regardless of changes in activity level. Then the rent of the factory is fixed. Still, depreciation is fixed. Now there's something called step cost. Step cost is the cost that remains standard for a little while, goes up, remains stagnant again, goes up again. It dwindles. Um, a good example would be royalties. Some of us that maybe our organization pay royalties or somewhat some
Sorry,
utility
sir. Please, what
bills.
did you call the cost again? I'm so sorry.
Step cost. Step cost. Can you follow me? I think I might need to share my screen so that everyone will be. Maybe I'll have to use the board as well so that you will follow me very well in the class. I would have to do that so that we are all on the same pace. But let's continue while I'm setting up my gadgets to do that. I hope we're following up to this point where I've spoken about step cost.
Sir, please, I would like to ask a question, sir.
Yes, sir, we are following you, sir.
Go ahead, ask your question. Okay.
Okay, sir. Sorry. I would like have to bring back a little, sir. I was confused when we were trying to explain that depreciation on car, that's a fixed cost. But what if you said using straight line? What if it's not a straight line, as in depreciation on equipment, without using straight line? Can it be classified as variable cost?
It's cool.
I still want to get that picture clear, because during the previous class, I once asked a question about it. So I was told it's a variable cost.
Oh, depreciation is a variable cost?
Yes, I want to know, sir.
Okay. Please, do you want to share exactly the explanation that you were given?
Okay, in my research, I came across depreciation of equipment as a fixed cost. So I threw a question during the previous class, like, is depreciation also known as fixed cost or variable cost? So I was told it's a variable cost.
No, no, no. That was a misconception. He told you in that class that it's a fixed cost. He never said it's a variable cost.
No,
No.
let me allow
Depreciation of
him.
equipment.
Hello, please. Let's get
Yes, sir.
exactly his explanation.
Yes, I was asking this depreciation on equipment.
Mm.
Sir, can it be classified on fixed cost or variable cost? So the answer I got is quite different from your explanation now. So I'm kind of confused, sir.
Please,
I
do you
won't
want
mind
to
if you
say
throw more
exactly the
light,
example, the answer you got?
sir.
Do you mind sharing exactly the answer you got?
That's what I'm saying, sir. That's what I'm saying. He went straight and said it's a variable cost. So I was
Did he
confused
say
because
why?
sir.
Did he say why?
No. He didn't give me. He didn't go further. He just said it's a variable cost because I had to table it out. I was like, is this depreciation on equipment a variable cost or a fixed cost? He said it's a variable cost.
Okay.
As you have explained now, that's under using straight line that it's a fixed cost. I'm kind of confused, sir. Don't be offended, sir. Don't be offended.
No,
I
no,
just want
no.
to clear my.
We're here.
I just want to
I
clear this my confusion.
Okay. Let's start to explain um and ensure that you are completely clear. What is the
Yes, sir.
meaning of depreciation itself, and why would we say that depreciation is a variable cost? So to start with,
Sorry, please, can you
please mute yourself so that you get me.
Okay.
Now, depreciation is generally considered as a fixed cost. To start with, depreciation is a non-cash expenses that represents the reduction in the value of a tangible asset over a useful period of time. So because you bought your iPhone 12 for 500,000, for instance, you assume without considering that you are going to carry that phone for 5 years. So every year you will tell us a story in the books that this iPhone will reduce in value by 100,000 every year, assuming without considering. So at the end of the first year, you are coming to report to us that the phone you bought 500,000 is no longer valuing 500,000, but it is now valuing less, 400,000. That is 100,000 every year. My phone is going down in value by 100,000 every year. The purpose is I don't want to misrepresent or misdirect the users of the financial statement that my asset, my iPhone is still 500,000. Meanwhile, it has suffered wear and tear. Whether you have used that iPhone in the first year to make 5 billion naira, or you've used it to make 1 million naira, you've used it to make 200,000 naira, regardless, because you have already set a fixed and a steady parameter to reduce the value of your iPhone. That amount that you have kept to reduce that value is a fixed amount. It does not change. It is 100,000 every year. So if the first year you were able to use your iPhone to make 1 billion, it will not come and change the depreciation amount that you set for the iPhone. If in the second year you are able to use the phone to make 2 million, it is still 100,000 that you are going to reduce the value of the iPhone every year. So it typically does not change. Depreciation does not change based on the volume of goods or services that you produce with the equipment. So depreciation is a fixed cost. Depreciation is not a variable cost. I don't know if that has answered your question
Yes, sir.
clearly.
Yes, sir. Thank you,
Are you
sir.
fine?
Asleep.
Yes, I'm fine, sir.
Brilliant. Let's proceed.
Sorry, sir. I also have a
Um,
question. I also have a
oh,
question, sir.
okay, go ahead. After this, we'll move most questions to either the chat box or after the class, or maybe when I call for it. Go ahead, proceed. Feel free.
Okay, sir. My question is, what are the parameters used to calculate depreciation? Is it that there is an equation for it, or it is someone that, or it's being set by a particular person? Like you are the one to determine what you will use or the value you use for what is it called?
Depreciation.
Depreciation, yes. Or there is a standard, or there is an equation set for that. What are the parameters one have to use to calculate it?
Okay, thank you. Depreciation is treated in full when you are doing financial accounting, and then you are going to learn extensively about depreciation in financial accounting. However, I think I'll just mention here that yes, there are a lot of parameters that are used in computing depreciation, determining depreciation. We have standard rates, percentages. If you pick up financial statements, let me start with when you pick up financial statements and you check their notes to the account, all financial statements will always tell you that this is the basis for our computing depreciation. So we have rates like 20%, 10% for furniture and fittings, 20% for plant and machinery, computer equipment, 25%. It is a standardized rating in terms of percentages. But however, there is a formula that is used to compute depreciation, and it depends on the method that you are using. We have different method of computing depreciation. We have the straight line basis, the reducing balance basis, the sum of the year digits, and the rest of it. So, but the standard, where the generic is always the straight line basis, in which we would just sit down and say, what is the cost of the asset? Is there any salvage value or scrap value? And then how many years would we use this asset? Then we'll now find the depreciation amount every year. So it's always cost minus salvage value all over the residual value,
Okay,
all
thank you.
over the number of years, sorry, to know the depreciable amount. Please confirm you can hear me.
Yes, sir, we
I hope you
can
can
hear
hear me.
you. Yes, we can hear you.
All right, that's fine. So depreciation is a separate topic, fully treated on financial accounting. But I'm sure that explanation covers, and you are fine with that.
Yes, sir. Thank you very much, sir.
Okay, let's proceed. So we've learned about those basic concepts. Let me share my screen so that we can be working smart. Please mute yourself. Thank you. Why I want to share my screen is because we would have to do some computations, maybe within the course of the class. I hope by no means are we having people that are tired already or somewhat. Please. Okay, let's proceed. I've explained the concept of depreciation, and I've also explained to us the meaning of stepped fixed cost, the meaning of stepped fixed cost, the meaning of variable cost, the meaning of mixed cost. I'm sharing my screen so that I show the graphical representation in case you have to look at this eventually. Please a minute, just bear with me. Let me get this right. Okay. Please confirm you can see my screen.
Yes, sir.
Okay, so when we say fixed cost, normally we would always have to show this in terms of a graph. Say over here would be the cost of our items, and here is point zero. Here is the activity levels. So if, for instance, you produce 5 items here, you produce 10 items here, you produce 20 items here, as the case may be. I hope we are following. And here is say 10 naira, 20 naira, upward accordingly. By fixed cost, we are simply saying that we are looking at a cost that remains the same. If you produce 5 items, it is still the same 10 naira. You produce 10 items, it's the same 10 naira. You produce 20 items, it's the same 10 naira. Even if you produce 30 items, it will still be the same 10 naira. So we would say that fixed cost will vary, would have a parallel line. That was the explanation I gave. Fixed cost will have a parallel line that is synonymous, or that is like going the same with your activity level. So you always see different expression that that your fixed cost is always shown in manners, in different approaches. Like one will say fixed cost. Anytime you see fixed cost, you say fixed cost looks this way. This is fixed cost. Zero activity level, and the rest as the case may be. However, if we want to show variable cost, I'm going to ensure that we follow this properly line by line. That's why please we'll take some time in this presentation. Job, you want to talk? Your hands is up.
No.
All right, thank you. Can we continue, please?
Yes, sir.
Yes, sir. Yes, sir.
All right. Now, our variable costs are the opposites. Can we still see my screen?
No, sir.
No, sir.
All right.
Yes, you can see it now.
All right, that's brilliant. So our variable costs at the opposite side is the cost that if we have the same presentation of activity levels
Please, I'm not seeing the screen.
and we have the cost at this side with 0 here. Our variable cost at the opposite side. Can you see the screen? Somebody saying you can't see. Please use
Yes,
the
we can
thumbs up
see
for
you,
Yes,
those
sir,
that
sir.
we
can
can
see.
see you.
You can see it.
So if this changes from 0 to 5 down here, we have 10, 15,
No, I can't see.
20, and 25. I think it's your network. Please try and work on your network. Thank you. 10, and then we have 200, for instance. This is 50, as the case may be. By variable cost, we are saying that as our activity level is increasing, the cost is also increasing. So if, for instance, we want to produce 5 items, we spend 15 naira. So the graphical representation would look this way. So 15 naira, I spend 5 items. At 100 naira, I spend 10. At 10 items, I spent 100 naira. I want to produce 15 items, I spend 200 naira. So if you want to now plot the graph, the connecting graph, it's going to look this way. So which by implication says that our variable cost would grow progressively. It is increasing as your activity level increasing. So as these activity levels increases, this activity levels increases, the variable cost is also going up. I hope we are following. So that's why you would have those graphical representations showing individually, like say that your fixed cost is shown in a different dimension and your variable cost is also shown in a different dimension. Let's proceed. We have quite a huge items to do today. So we always say our fixed cost is represented as this, and then our variable cost will be represented as this. And we already know why it looks this way because um of, for instance, this was what we said here, and here this is what we said. All right, let's proceed. Any concern? Please look at the screen very well because I know I'm about to do some computation. That's why I had to ensure that we look at I take up this approach. Okay, as part of the things that I've also said today is the concept of the step fixed cost. let me show the graphical representation for that before we proceed. So I already mentioned that we have a cost that is step fixed cost. And I said that for step fixed costs, the cost stays constant for a while. So if we have a case of our cost and our activity levels, the cost stays constant for a while, and thereafter it increases. After a while, it stays constant, and then I gave an example that a cost that might stay constant for a while, then thereafter it increases, and then stays constant again, increases again, is simply a step fixed cost. And I think that was when somebody mentioned that how about a case where somebody is getting commission plus what would we classify such a cost? So royalties, I can remember I mentioned, is an example of a cost that maybe if we have 5, 10 here and 15, and we have 100, 200, and 300. If you are paying royalties for production, you pay 5 naira for $5, for instance. Most royalties are always in ranges. If you are producing from 0 to 100 items, this is what you're going to pay. If you produce um, between 100 to 200 items, this is what you pay. Like that all through. So it will have a picture of a cost that remained constant between 0 to 100 and went up again between 100 to 200. And probably if you are now increasing the activity levels again, it goes up again between 200 to 300. So anything that you produce in between this 0 here to 100, this cost remains constant. Anything you also produce between 100 here to 200, the cost still remains constant. Like that all through. All right. Some employees' payments might also take this particular format, where we would have contingent payment plans. Say we are paying people based on the production of spans or ranges. So any activity, the activity level within this range, that their salaries remains the same until they perform above that particular range. All right, so we would always say that there is always a linear relationship between our variable cost with our volume of output. I'm sure that everyone in this class by now understands that when we say volume of output, activity level, we are all referring to the same thing. Now, the concept which is very important, the concept of semi-variable cost or mixed cost. When we say semi-variable cost, we are simply saying mixed cost. We are also saying semi-fixed cost. So when you see the word semi-variable, it's the same thing as semi-fixed costs. It's the same thing as semi-friendly. You see some people will call it, you see people call it mixed costs. So all of these are synonymous. It is just the concept that comes up because fixed cost is added to variable costs. When there is a fixed component in a cost and there is also a variable component in the cost, we would say that that cost is a semi-variable cost. We would say that that cost is a semi-fixed cost. We would say that that cost is a mixed cost. We would say that that cost is a total cost. So some salesmen salaries, that example, that question somebody asked earlier, would always have a basic salary plus a commission. So the total salary that the salesman will go home with is a mixed cost. The cost of running a car, say how much do you spend in running your car? That cost will also be classified as being a mixed cost because it has both the components of payments that you're making that remains the same regardless of if you're driving the car or not. A good example is that insurance we said. And then we also have the cost of the oil, the petrol, the repairs. Repairs will depend on the usage of the vehicle. If you're not using some companies will always say, once you reach this mileage, your vehicle is due for repairs. Not the one that we are using vehicles anyhow in Nigeria. Some companies maintain that policy. Once you have arrived, once you have used your vehicle to this mileage, you need to go for maintenance. So maintenance is an example. The road taxes that you pay remains the same throughout the year. Whether you are carrying 5 people, the renewals that you do remains the same, regardless of the people. So the cost of you running the car is a semi-variable cost or a mixed cost or a total cost. Let's proceed. Now, we cannot learn cost behavior without having to understand which cost is fixed and which cost is variable. You see this concept that we are talking about here, the whole concept of semi-variable cost is a concept that will give rise to cost segregation, that will give rise to a lot of topics in the whole management accounting that we are going to learn about. Now, I will try to ensure that we are active in the class again by me asking a little few questions to be sure that everybody is following me perfectly well. Now, let me ask a few questions. Is telephone bill a fixed cost, variable, or mixed cost?
It is a variable cost.
It is a variable cost. Please, when you say it, you say why. Kindly proceed. Who spoke before? Can you hear me clearly?
Yes, it's a variable
Yes,
cost
sir.
because it
State it. Okay.
changes with the number of time it's being used or the call is being made.
Okay, brilliant. So telephone bill is a variable cost. Annual salary of the chief accountant, is it a variable cost, fixed cost, or a mixed cost?
It is
Fixed
a
cost.
Fixed cost.
A fixed cost.
for the period of a year.
All right. The management accountant's annual membership fee to ICANN.
It is a
Fixed
fixed cost
cost.
because it
Fixed
doesn't
cost.
change.
The cost of materials used in packing 20 units. of item in a box?
Variable cost.
It's a variable cost.
Variable cost.
The wages of a warehouse man.
Variable cost.
Variable cost.
Fixed cost.
Variable cost.
Variable
Variable
cost.
cost.
Okay, that shows we understand
Hello, ma.
exactly what we're doing.
Yes, ma.
Now,
Ekalema. Yes.
please be
Ekalema.
prepared. Is it Olamide or who is making the call? Please, thank you. All right. So there are some assumptions that we use when we are learning about cost behaviors. One major assumption is that um, we can not say that we can talk about cost behavior if we don't know fixed costs and we don't know the definitions. That's why I gave those examples for us to be sure and understand the meaning of those costs, variable and fixed. Now we are moving quite fast into analyzing cost. By analyzing cost, we are like saying segregating costs, differentiating between the variable component in a cost and the fixed component in the cost. This is why I had to share my screen so that you would follow us very well. There are two major methods of segregation of cost. There are two major methods of segregating cost. We either have the high or low method, or we have the linear regression analysis. So I'm going to start by explaining the high or low method. So you please follow me very keenly to ensure that you are getting the best value from what we are doing. I'm still sharing my screen and I'm going to take it gradually. I'll try my best to ensure I make everybody follow what we are doing. Remember what I said, that the concept of variable cost, the concept of semi-variable cost, posed a problem. Let me start with this example. If, for instance, the salesman collects a salesman collects salaries, 500,000 naira. And then this same salesman collects commission. People will bear with me with my handwriting. Can you? Commission of 50 naira. So he goes home at the end of the day with 550k. If at all this is this man's salaries for January, February, the same thing. March, the same thing. His payment is not fixed. So we would always have instances that we will say the salesman will now say the different months, the amount he collects, the quantity of goods he sold, he made sales for. So, for instance, January, February, March, and maybe we proceed to say April. One can start saying that in January, this man collected 550. In February, he collected 1,000. In March, the man collected 600. And in April, he collected 880. And the quantity of goods he made sales for also dwindled. It changes. So over here in January, this man sold 1,000 items. Here, he sold 2,200 items. And then in March, this man made sales of only 1,100 items. And in April, he sold 1,300 items.
So it has to be below the quantity of 550 from your analysis.
Sorry, please. Do you want to say that again, please, sir? Can you hear me?
Yes, I can hear you, sir.
What did you say? Please, do you want to say that again?
I said from the analysis, okay, I get it. Sorry, I just finished the script actually.
All right, let's proceed, please. So over here now, this salesman's salary is changing every month. If somebody tells you that what is the fixed component, what is the fixed component in these figures, all these figures, inside this 550, what's the variable cost? What's the fixed cost? Inside the 600, what's the variable cost? What's the fixed cost? So we have a problem. The problem we have is that this cost, the amount that we are given, has both components of fixed and variable. We have to now segregate and tell, out of this 550, what is the component of fixed in the 550? What's the component of variable in the 550? Out of the 1,000, what's the component of fixed in it and what's the component of variable? Out of the 600, what's the component of fixed in it? What's the component of variable? Like that for all the cases. That takes us to the concept that I'm saying, that cost segregation or cost analysis takes two broad methods: the high or low method and the linear regression analysis method. Please confirm you can hear me very well and you're following what I'm saying.
We can hear you,
Sorry,
sir.
it
Sir,
seems to be
linear what,
cracking.
sir?
It's just my end.
It seems to be
Hello, sir.
please, you
You
have
said
to
high or low method or and linear and something. I want to get that clearly, sir.
linear regression analysis. Linear
Okay,
regression
linear regression.
analysis.
Thank you very much.
Now, please, I would love you people to follow very keen, because I'll take just the high or low method today, the way it is going. So going with the high or low method, going with the high or low method, we would say that there are steps that needs to be followed. Let me give you the steps. High or low method. The first step is for you to identify the highest and the lowest cost and activity level. So, step one, you should do what? Identify the highest activity level with the highest cost and activity level. So I'm saying identify the highest cost and activity level. Also identify the lowest cost and the lowest activity level. We proceed. After the first step, the next thing that you're to do, step two, is for you to find the difference between the highest and the lowest cost. Find the difference between the lowest and the highest activity level. The two items, you find the difference. Find the differences. So you find the difference between highest cost and the lowest cost. You also find the difference between the highest activity level and the lowest activity level. Step three. Please let me take a pause and confirm we are all following me little by little. Everything that I've done so far. If
Yes,
you're
sir.
following me, you use a thumbs up. Good.
Following, sir.
Okay, the last step, not the last step, sorry. I think I am just breaking it down so little, so it wouldn't be the last step. So the step three now, you should divide the difference between the cost. Step three. I'm sure we can still see my screen very well and we're following very well. Find the difference. First step is identify the highest and the lowest. Step two is find the difference between the highest cost. This is step two. Difference between the highest cost and the lowest cost. Also find the difference between the highest activity level and the lowest activity level. Now, step three is divide the difference in cost by the difference in the levels. So by step three, we are simply saying what you are to do is difference in cost divided by difference in the activity level. Whatsoever is your answer is your variable cost per unit.
Sorry, I didn't get that. You said whatever the answer is what?
Is your variable cost per unit. Whatever is your answer here is equal to what is always denoted as B, which is
Hello, sir. Are you there, sir?
We lost him on the call.
Okay. Thank you.
all right. Can you hear me now? Sorry, please. I think I lost my internet.
Yes.
We can hear you now. Welcome back, sir.
All right, thank you. That's fine. Okay, so let me just reiterate what we've done so far. So I started the session with saying that we are looking at cost behavior. And we've mentioned that we cannot talk about cost behavior. We are saying that cost used to change, cost used to respond. By behavior, we are simply saying how people react to the way things are done. So cost also reacts when activity level changes. We said that some costs might be fixed. It doesn't differ whether you are moving forward or you are moving backward. It doesn't concern them. That cost is fixed cost. We also move forward to say that some costs would change and for you as they change, the cost they change give you. Do me, I do you, man no go vex. So as you want to increase to 50 items, the cost will also go up. But the other one was just a very calm, fixed cost just remain the same regardless of your changes in activity. And we said that variable cost is the name given to the cost that changes as activity level changes. Now, we show these graphical representations for cost, indicating how different costs look like. We proceeded. Okay, you're asking for step 4. Don't worry, we'll get there. I hope we are fine that I'm taking this recap, or should I just proceed?
Recap, sir.
All right. All right.
So continue with the recap.
Sorry, guys, I can't hear anything. Hope I'm not the only one.
Same here.
Yeah. We are together.
That's a relief. Thanks.
And this is after 10 already.